Okay, as I was saying, when we shall be talking about receivables, we shall be using that concept in most cases, the prudence concept. The prudence concept is what we shall be using because we're talking about anticipation. So mostly we're talking about anticipation. We anticipate that this debt can be repaid or it cannot be repaid. So in most cases, you'll be using the prudence concept where it cater for such items. So bad debts you are when written off, they shall be treated as an expense. So in most cases, when the bad debts are written off, they shall be treated as an expense. That one is correct. So when the bad debts are written off, they shall be treated as an expense. So it shall be debited in the income statement. So it shall be debited in the income statement or the P&L account. For provision for bad debts. Now remember that it's an estimate. So we're talking about a provincial. We're talking about an estimate of an expense of bad debts. So what is the estimate that we need to put so as to cater for the bad debts? So that estimate is also an expense. So that an estimate is an expense. But remember now the initial provincial will be charged in the income statement. Now, the initial, meaning the first provincial will be an expense in the income statement. But in the next subsequent years or in the next coming years, you should realize that we can either have a decrease or an increase in provincial. Now, in the case where you have a decrease, it can either be an income or an expense. So what do you think when we have a decrease in provincial? So when you have a decrease in provincial, for example, then you find you have a decrease in provincial. And that was very, very important. And the reason why in the same the word initial, the first initial will be treated as an expense in the income statement. But the coming provincials in the next coming years will be either a decrease or an increase in the provincial. So in the case where you have an increase in the provincial, then you shall treat it as an expense. So the increase will be an expense in the P&L, but the decrease will be an income. So it will be created in the income statement as other income. So that's one thing you need to know. So initial provincial will always be an expense to the company. But going forward, the other coming years where we have an increase in provincial, so I will show you how to determine whether we have an increase or a decrease in provincial. So, but in the case where we have an increase, that increase will be an expense and will be charged. It will be charged in the income statement. But in the case where our provincial reduces, then that one will be treated as an income and it will be credited. It will be credited in the income statement. I think that one is well elaborated. Let me see if you can write it down. When a provincial exists, so we say when a provincial exists, but is subsequently increased, but is subsequently increased. So when a provincial exists, but is so the keyword is the word subsequently, but is subsequently increased, the amount of increase is charged in the income statement. The amount of increase is charged in the income statement. Is charged in the income statement. The amount of increase is charged in the income statement. And then when a provincial exists and it is reduced, So when a provision exists and it is reduced, what do you think will happen? The decrease, you can say, the decrease is recorded in the income statement. The decrease is recorded in the income statement. The decrease is recorded in the income statement. The decrease is recorded in the income statement as income. As income. As income. Or reduction. Or reduction in bad debts. Or reduction in bad debts. Or a reduction in bad debts. So when a provision exists and it is reduced, the decrease is recorded in the statement, in the income statement as incomes, or a reduction in the bad debts expense, or a reduction in the bad debts expense. The bad debts expense. So we have three items here. We have the initial provincial. No, the initial provincial is the first provincial that the company would do what? Would estimate. Now that initial depreciation, the whole figure will be treated as an expense in the income statement. But the subsequent coming years, we need to determine whether the provincial is an increase or is a decrease. Now, in the case where the provincial is an increase, the amount is charged in the income statement as an expense. As an expense. The amount will be charged in the income statement as an expense. So the amount will be charged as in the income statement as an expense. Now, but in the case where the provincial is reduced, so the provincial exists and it has reduced. Now the decrease will be treated as an income in the income statement. So the decrease will be treated as an income in the income statement. And then the value of trade receivables. Trade receivables must also be adjusted. So how do you adjust them? So when you get the trade receivables must be adjusted by lessing depreciation charge and allowance for depreciation. Yes, nani wana type? So unaongea usitype. Sasa nini kavu? So huyo nani ame-unmute? So mute tafadhali. So I think tuko sawa hapo. We are okay. Now, the value of trade receivables. So you need to know that the value of trade receivables, is shown in the statement of financial position. Is shown in the statement. Of financial position. It's shown in the statement of financial position. Let me send you a question. We do it together in the group. Let me send you a question. We do it together in the group before we go to our past paper. We don't want to complicate things. We just want to make them as easy as we could for you to understand. So nimetuma someone to read for us that question. So who read for us that question? Nimetuma kwa group sai. Kamau books. Kamau books. Tutaki kupeana mambo mingi, hatutaki kuwa na mambo mingi. Just how to be simple people doing simple things. Akwa anajitolea.
The following information was extracted from Kamau Books of Domfree Company Limited. Year ended 31st December. Debt after bad debt written off. Bad debt written off, provision for bad debt. 2015, the debt after bad debt written off was 20,000. Bad debt written off was 2,000. And provision for bad debts was 5%. 2016 data after bad debt written off was 25,000. Bad debt written off was 2,500. And the provision for that bad debts was 5%. 2017, the data after bad debt written off was 35,000. Bad debt written off was 2,700. And provision for bad debts was 5%. 2018, data after bad debt written off was 32,000. Bad debt written off was 3,000 and provision was 5%. Required bad debt account, provision for bad debt account, profit and loss extract, statement of financial position extract.
Thank you, very important. Okay, let us do that one. Now, I want to emphasize on one thing. I just want to emphasize on this part. The reason why I'm doing that question is because I want to emphasize on these three items. These three items. First one, the initial. This one is supposed to be from this part. I want to emphasize on the initial provincial, and also I want to emphasize on the subsequent provincial. So, on the subsequent provincial, we can either have an increase or a decrease. So those are the things I want to focus on. Let us do that question together. Let us do that question together, and you'll be very keen. And you'll be very keen. Make sure you are keen enough to see what we are doing. So let us start with come up with the bad debts account. Now, bad debts account. Now the bad debt. So what is the bad debts for the year 2015 from the question? What are the bad debts for the year 2015? So we start with the 2015. 2015. So how much will be charged in the income statement? How much will be charged in the income statement? How much will be charged in the income statement? So 2015, who will tell us the bad debt? Aye. Bad debts. Now, ukienda kwa 2015, we have a P&L. P&L of 2000. Can you see it? Can you see the 2000?
Yes.
Yes, 2000. So that's our bad debt. Now we are creating the bad debts in our bad debt. Now, where will we debit this amount as an expense? Yes. This amount will be debited in which account? Or in which account? As an expense?
Debtors account.
No. Now we are creating this amount. Remember, we are creating this amount in P&L. We are creating this amount. We are creating this amount in the bad debt account. Now, meaning we need to debit this amount in the profit and loss account, the income statement. So we are going to debit this amount in the P&L. Now, mtaiona wakati come up na extract. So this amount will be credited in the P&L. Will be credited in the P&L. Now, remember the bad debt does not have the balance carried down. So you need to know this one. So your bad debt does not have the balances. G brought down or you want to carry down. There's nothing like that one. So you cannot have such kind of an account. Now in this other side, remember this the date. This is 2015 debtors. Now at the end, so this one will be at the end of the year. So you can see 31st 12. 31st 12. We shall do the same 2000 and we close the amount. So we don't have the balance carried down. We just close it with the debtors. We don't have the balance carried down. Because so this account will be always closed. Come on, 2015, you close the account. This account will not go to 2016. You close that account. How do you close it? By so we shall put the debtors 2000. So meaning the debtors will also reduce by 2000. So but this amount will be charged. The P&L will be charged in the income statement. So we shall debit there. The same thing you go to 2016. 2016. So what's our depreciation for the year? P&L depreciation for the year. In your P&L, what's the depreciation?
2500.
2500. Now 2500.
2500.
Now 2500, that's on 2016. Now how do we do? How do you close this account? Because it cannot go to 2017. We need to close this amount. We close it by what? By debiting the debtors at the end of the year. So at the end of the year, we close that account by debiting the debtors. So in a share, you cannot have the balance at the carried down to brought down. This account hainagayo, you need to close it totally. So that one you close it totally. So 2017. 2017. So 2017 in Gapi. So if we go 2017 is 2700 to the P&L. So nasema P&L because this one will go to P&L. This one will go to P&L as 2700. But remember, you need to close this figure. So how do you close it? This is how you close it. Kama kawaida. That is how you close it. Tunaenda 20, inafika hadi ngapi? 2018. 2018 is the last date. 2018. 2018. So P&L. P&L. So the P&L is our bad debt. What's our bad debt? So remember, this P&L represent our bad debt. So P&L represent our bad debt. Nasema P&L because it is going to the P&L account. Remember, this one is going to the P&L account as a debit. So in our P&L, inaenda kama debit. So how do you close this 3,000? So debtors account 31st 12 mwezi wa 12 mwisho 3,000. Umeona venye bad debt inatengenezwa? So in every year you close the account. In every year you close the account. You close the account with the debtors. You close the account with the debtors. So the P&L. So for example, if we had a bad debt for the year of 2,000, then this 2,000 would be our debtors. So it will reduce the debtors by 2,000. So we create this amount on this side. Now, kumbuke this 2,000 will also affect the debtors account. How will this 2,000 affect the debtors account? We reduce the debtors account by 2,000. Tuko sawa hadi hapo? To reduce the data by 2,000. Tuko sawa?
Yes.
Yes, I think hiyo tuko sawa kabisa. Na kwa hiyo swali yetu, the good thing na hii swali, ukiangalia swali tumefanya saa hii pale juu. The debtors were after the bad debts were written off. So remember, the debtors after the bad debts written off, kumaanisha this amount has already been deducted in the debtors account. Is that correct? Kulingana venye swali wamesema pale juu. Wamesema year ended that first December, we have the years. Then next wakasema bad debts after the bad debts written off. Bad debts after the bad debts written off. Now the bad debts ndio hizi zenye ziko written off. Is that one correct? Now this is after they have been deducted in the receivables. Iko sawa? Now in case waja deduct, watakwambia you prepare a receivables account, then you deduct. Tuko sawa? But in this case, we don't need to prepare the debtors account. Na kama uta prepare, we shall not deduct this amount because already they have been deducted. That's number one. Number two, we also need to determine provincial for bad debts account. Is my board still clear? Yes? Can you see my board?
Not clear.
Na mbona hamsemi? Si niwaambia mko mnaniambia. Wengine? Is it clear?
Clear. Yeah, it's clear.
Ni clear.
Okay, sawa sawa. So let's go to the provincial for bad debts. So before we do the provincial, we need to know if we have an increase or a decrease. Is that one correct? Now, how do we go get the provincial? So this is the working first before we do the items. Now, for you to get the provincial for bad debts, it is equal to the percentage you multiply with the percentage of receivables. So 2015. So 2015, what is our the first thing? Kwanza, the percentage is 5%. The provision for depreciation is 5%. Kama sijakosea. Now, what is the value for the receivables? Now, the value for the receivables in 2015, you can see is 20,000. 20,000. Aya, tunaenda 2016, 2017, 2018. 5% of 25,000 Then 5% of that 5,000. 5,000. And then 5% of what? 32,000. So what would be the first provincial for bad debt? What would be the first provincial?
1,000.
1,000. Okay. 1,000. What did you say about the first provincial? What did you say about the first provincial? Can you remember? What did you say about the first provincial?
It is treated as an expense in P&L account.
Yeah, that one is correct. So initially, it will be treated as an expense in P&L. Now, if it is treated as an expense, what will be our figure? So tuanze hapa, tunaanza na hiyo kwanza 2015, we can talk about 2015. Okay, start with the 2015 first. So it is treated as an expense. Now, if it is treated as an expense in the income statement, kumaanisha it will be created here as a P&L account, which is our provincial. So remember, it's our provincial for bad debt. Niandike hivyo. Provincial for bad debt, which is our P&L account. Ama niandike tu in full. Let me just write it in full. Provincial for bad debt. So this one will go to the P&L account. It will go to P&L account kama kawaida. So how much is that? Are you able to agree? Are you agree?
Yes.
Now, what will be, how do we balance this figure? Because it's 2015, so that we're going to go 2016. We need to bring the balance carry down. So this one will have balance carry down. This one does not have. Are you okay? Hii haina. So kwa mtihani mwenye nambaka kiona umeandika hapa balance carry down or blah blah blah, anasema asante sana kwa kunipatia kazi rahisi. So in this case, the balance carry down, how do we balance this account? How do you balance this account? So huku itakuwa ni 1,000. So that the account is balanced. Is that all correct? Uko sawa hapo? Nataka mnanijibu tukisonga.
Yes.
Aya, 2016. What will be your balance brought down? Balance brought down itakuwa ngapi?
$1,250.
Bado up to 50. There hapa. This is the balance carried down. Balance carried down to 1,000. What will be the balance brought down?
1,000. 1,000.
1,000. Correct. 1,000. Now we need to see whether we have an increase. Now we said, now the first year the initial. So the first year is the initial. We say all the amount will be charged as an expense. There hapa. Si ni kweli? In the income statement, we shall credit this amount in the provision of budget. Then this amount will go to the income statement as a debit or as an expense. Is that all correct?
Sawa.
Then in the second year, now, so that was the first year. Now, in the second year, we need to determine whether it's an increase or a decrease. Now, 5% of 25,000 in ngapi?
1,250.
Now 1,250. So is it an increase or a decrease? Between 1,000 to 1,250. It may increase or it may reduce.
It may increase.
It may increase na ngapi?
250.
So we have an increase of Kenya shillings to 50. Now, this to 50 is an increase. What do you say about an increase? Is it an expense or an income?
50.
Is it an expense or an income?
An
Expense.
expense.
An expense, sivyo? And therefore we say provincial for bad debt. So itaenda kwa P&L of ngapi? 250. Now find the total. Itakuwa ni 1250. Na hapa pia 1250. So what will be the balance carried down? What will be the balance carried down? At the end of
1250.
12?
50.
Is that this is the balance? Is that not correct? 1250. Haya, angalia ya kwanza. What was the balance here at the end? 1000. Is it the balance here?
Yes, 1000.
Yes.
Haya, to the next 2017. 2017. Now what's the balance? Brought down. Balance brought down.
1250.
1250. Now, calculate for me 5% of that 5,000. How much is the provincial?
1750.
1750. So is it an increase or a decrease between that up to that point?
An increase.
An increase of how much?
500.
500. So tunasema provincial, which is supposed to go to provincial. So it's supposed to go to the P&L, sivyo? As an expense. 500 total. Itakuwa 1750. So huku total ni pia ni 1750. Sijui kama imetoka kwa laini. So what will be the balance carried down? The balance carried down will be equal to 1750, na ndio hii hapa. Umeiona? Are we okay? Tuko sawa hadi hapo?
Yes.
Haya, tuendelee. Tuendelee kwa the next one. Provision for bad debt account. Bad debt account. This one we're doing for which year? 2018. So balance brought down ngapi for the previous period? Balance brought down
1750.
1750. Now 5% of the 2000, how much is that? 5% of that 2000.
1600.
1600.
So we have is it an increase or a decrease?
Decrease.
How much?
150.
Now 150 is an income. Remember, we are crediting expenses. What do we do for income? Do we credit also expense or also income? Or do we debit? So remember, we are crediting in our
We
provision. We
debit.
are crediting expense. So we debit.
We debit.
So we say provincial for bad debt, but remember now this one is an increase. So it will go to the P&L as an income of how much? 150. Tuko sawa? Now let's find the balancing figure. The balancing figure itakuwa ngapi? Ni 1750. 1750. So what will be the balance carried down? Balance carried down?
1600.
1600. And then the last one, we do an extract of the income statement. Extract of income statement. of income statement. So we say we less expenses. So the first one is gani? What's our first expense? Na ni mingi. So tuko na bad debt. So tunafanya hivi. Ni mingi fika inatoshea hapo. What did I squeeze? So we have 2015, 2016, 2017, 2018. So number one, we have bad debt. Bad debt. So we say that the bad debt will go to the P&L as an expense. Is that one correct? 2015. Tuko sawa? Si mnijibu bwana.
Yes.
So this one will go to the income statement as an expense. So unakuja naiweka hapo unasema we have an expense of how much? So we have an expense of 2,000. Aya. You also say in the 2015, we also said that we have a provision for bad debt. We said we also go itaenda kwa income statement as an expense. Provision for bad debt. So 2015, where is it? Ndiye hapa. Can you see it? Okay, can you see it here? Can you see it?
Yes.
Yes.
Ngapi? Ngapi?
1,000.
1,000.
1,000. Ndege iko sawa kabisa. Tukimaliza 2015 tunaenda 20
16.
so 2016. So 2016. So tuko na bad debt. Na tuko na provincial for bad debt. So what's the bad debt for 2016? Bad debt ndio hii hapa. So tunasema we have credited in the bad debt but itaenda kwa income statement as an expense. So ngapi?
2,500.
2,500. Aya, provision for bad debt ndio huyu hapa. Ngapi?
250. 250.
250. So kumaliza 2017. Talk about the bad debt. And then we have provision for bad debt. For bad debts. That's 2017 after 2018. So 2017 tunakuja hapa. You can see we have a bad debt of 2,700. 2,700. And then you can also see we have a provision of how much? 2017.
500.
Hii hapa. You can see. I think 500. 500. Then 2018. 2018 we have a bad debt. Bad debt ndio hii hapa. You can see it here. 3,000. 3,000. Alafu now we have an income. Now this one add other income. So hapa kuna hapa itakuwa sorry, we have a bad debt. 2018 we have a bad debt. But we are supposed to add other income. We add other income. So can you see the board?
Yeah.
So other income ni ngapi? What would be the other income? So what is the income that you're supposed to add in our income statement?
Incomes to not go expenses.
Yes?
Incomes to not go
150.
expenses.
We honor kwani your income statement inakaa hivi. Tunaanza na sales, we less cost of sales, then we less expenses. Then tunapata profit, our profit. Then we add back other incomes. Kwani mlisomea shule gani? So we are supposed to add the other comprehensive incomes. These are the other comprehensive incomes. Na nilikuwa nimeonyesha kwa ile class yetu ya kwanza. Remember our first class nikaonyesha a format of income statement. I told you we start with the sales. We say we less the expenses. Once we less the expenses, we add other incomes. Did I niliwaambia hiyo kitu kama hiyo?
Si huwa tuna add incomes kwa gross profit.
Eh?
Huwa tuna add income kwa gross profit, then tuna less expenses.
So you add it huko chini. Don't add it huko juu. Sawa? So we call them the other comprehensive income. This one is the other comprehensive incomes. Reason why it is not the income of the company. These are not the incomes of the company. Kama ni income of the company, the normal income of the company, ingekuwa ni sawa, but these are other incomes. That's why tuna add huko chini. Which ni ngapi? You can see it here, 150. Tuko sawa? These are other incomes. These are other incomes. Tuko sawa? So that's the extract. That's how you are supposed to do that question. Tuko sawa?
Yes.
Eti hapo kwa other income umesemaje?
Kwa other income. Nimesema for other income, you add the other comprehensive income. These are not the income nyinyi mnajuanga. You know kuna different ya hii income na the others. These are other incomes. They are not, that's why I'm saying other incomes. Not the incomes we know by what tunajua. So we have other incomes. So this income is not calculate here is what we call the other incomes. For example, gain from depreciation, gain from these bad debts, or the decrease in the bad debts. Those are other incomes. They are not the incomes that you know. For example, incomes from a particular item you umeuza. So hapa hakuna kitu tumeuza. It is just that we expected maybe an increase, but we had a decrease. That decrease is not just it is not necessarily an income, but we treat it as an income. That's why we are calling it another incomes, other incomes. So it is not the incomes yenye unaua unapata kwa financial statement the way sisi tunajuanga. We call them other incomes, not from the sales or from buying and selling of goods. No. Tuko sawa?
Yeah, so your 150 imetoka wapi?
Ongeza sauti, unajua sisikii vizuri.
Nasema from your explanation, hiyo 150 imetoka wapi? Ama nini umeandika kwa board?
150 na si ndio hii hapa tulikuwa tumesema this an income. Did we talk about this income? So tulisema if iko on the other side huku is an expense. But ukiangalia ya mwisho this one it was a decrease. We talk about a decrease. I told you it's an income. Have you checked your notes? Tukianza pale juu. Kuna mahali nilisema where a provincial decreases in a particular year, that decrease will be treated as an income. Did I say that one? Yes. Check your notes hapo juu. Tafadhali angalia tu hapo juu and then you tell me. We said where we have a decrease, we treat it as an income. But where we have an increase, we treat them as an expense. Now, all these are expense. 500 is an expense, 250 is an expense, 1,000 is an expense. But in 2018, it reduces from 1,750 to 600. Now, that decrease will be treated as an income. Remember, this is not an income. Tumepata kununua by selling a product. No, it is because we had estimated some amount as an estimate, but it can reduce as the year ended. So that decrease is what we call it income, and therefore we need to call them other incomes. Tuko sawa?
Yeah.
Sijui mbona net yangu inanisumbua hivyo. I don't know why, sijui. So side yenu is the net inasumbua?
No.
So you can see the board clear.
Yes, it's clear.
Yes?
Ni clear, iko sawa.
Sawa. So let us go to our past paper. Past paper. Now open your past paper. Nilikuwa nimewatumia kwa group. The one yenye ilikuwa what? Ilikuwa nimepiga picha. Sijui kama mtaipata. So open that. Yes, ndio hii hapo. I think unaweza iona. Let me highlight. So nimesema
Excuse me.
this. Open that one yenye nimesema this. So open that past paper yenye nimesema this. Yenye nimesema
Sawa.
this. So we start with the question number 26. We start with the question number 26. That question was tested in December 2007. That question was tested in December 2007. December 2007. The question was tested in December 2007. The question was tested in December 2007. So let's do that question together. So the question is on question number 26. Someone to read for us. Someone to read for us. Nara jitolea.
Number.
Najui mbona side yenyu sauti ni kidogo hivyo. What could be the issue?
In a new business during the year ended 31st December 2007, the following debts are found to be bad written off on the date shown. 31st May Vidija, 3,400 shillings. 30th September Vukulu, 463,000. 30th November Vihenda, 156,000. On 31st December 2008, the schedule of remaining account receivable totaling 14,420,000 is examined. It's examined and it decided to make an allowance of doubtful debts of 410 Kenyan shillings. You are required to show the bad debts account and the provision of the doubtful debts account, the charge of the income statement, the relevant extract from the balance sheet as at 31st December 2007.
Yes. Thank you, Doreen. So let's look at the question. The question was tested in December 2007, long time ago. So we need to make sure that everything itatoshea hapa. Now I want you to tell me. Let me clear this body quick. It's better.
Mbona mi sina hiyo question?
Okay. Now we are saying we are supposed to prepare what? Number one, we are supposed to prepare the bad debt account. So how do you prepare the bad debt account? How do you prepare the bad debts account? Yes. How do you prepare the bad debts account? Now remember we said the bad debt account do not have what? The bad debt do not have what? Yes. The bad debts account hainanga nini?
Haina the balances.
Yes. So the balance. So unaweza ni question gani? Question iko pale kwa past paper. Nimetuma kwa group. Nimesema this. Open that one and then you check question number 26. Question number 26. So hainanga balances. So tunaanza na hiyo. So bad debts account. Ningeweka hapa kidogo. Bad debts account. So tunaanza na 20. So in the business, in a new business, during the year ended 31st December 2007. So here in 2007 actually. This one represent for 2007. 2007. Now, what's our the following bad debt were found. Now add them together so that we get our P&L. So I prefer you add them together, P&L. So itakuwa ni 340,000 plus 463 because sababu zote ziko the same year. That is 2007 plus 156,000. So what will be our total P&L?
959,000.
Yes?
959.
So we say, so provision for bad debts, and then we say to P&L. To P&L account inakuwa ngapi? Umesema 9 what? 959,000. 959,000. Now we said it itakuwa balances, so huku tunaweka our debtors. So who is our first debtor? Of the question we have our first debtor tuko na Vidija. So we have Vidija as our first debtor. You are 340,000. So tusema tunaweka the debtors. So Vidija is our first debtor. We have Vukulu. Vukulu is also our debtor. 463,000. Then we have Bihenda. Bihenda 156,000. So that the account can balance. So 959,000. 959,000. 959,000. Hiyo tuko sawa hadi hapo? Tuko sawa? So the provision for bad debts to the P&L. So that amount will go to the P&L. 959 will go to P&L as an expense. Agree? So agree for bad debt?
Agreed.
Then number 2, provision. The same part is still provision for bad debts. Provision for bad debts. Provision for bad debts. Provision kwanza hapa nimefanya makosa. These are supposed to be bad debts. This is supposed to be bad debt to P&L, not provision. It's supposed to be bad debt. Not provision. It's supposed to be bad debt to P&L. So as an expense, total itaenda kwa P&L as an expense. so that we can come up now with our provision for bad debt. Provision for bad debt, that was in 2007. Now let us see. Now on 31st December 2008, on 31st December 2008, the account receivable was 14,200, and it's examined to make an allowance for doubtful debt of 14. That is 208. Na hiyo tumefanya ni 2007. So on 31st December 2008, the remaining balance account receivable was 14,200. Is examined and is decided to make an allowance for doubtful debt of 4,100. So we have an allowance for bad debt. So we shall consider the allowance. So we shall say, so the allowance for bad debt to P&L, ingapi? 110. Is that all correct? Or calculate the P&L. Is that okay? Yes.
Yeah.
Now, what do we do? How do we cross this account? We shall have the balance. So hii inakuwa na the balance. So the balance carried down itakuwa ngapi? 110,000. Is that all correct?
Correct.
Tushamaliza hiyo account hivyo. Then we are supposed to come up with an extract of the income statement. Extract of the income statement or the P&L. Or the P&L. So we less expense. So we have expense. So our first expense ni gani? Can you see it here? The bad debts. Can you see that the bad debts? 959 hii ndio inaenda kwa income statement. Is that all correct?
Yes.
Sikunisaidia kujibu hiyo. Is that all correct?
Correct.
What other expense can you see? Someone has to atujibie hiyo. What other expense? Which will go to the P&L. Which other expense jameni watu wangu? Tumekuwa tukifanya hizi mambo. Yawa. So we have it here, provision for depreciation. Not provision for bad debt. For 10. Hiyo sasa tumemaliza ama hatujamaliza? Then you can do extract for balance sheet. Extract for balance sheet. Now we have current assets. So we have the receivables. So in this case, is the receivables. So how much is the value of the receivables from the question? Who can tell us the value of the receivables from the question? What is the value of the receivables?
$14,420,000.
Ati ngapi?
14,420,000.
Yes. Tunaweka in thousand. Tunaweka in what? Look in thousand. 14,420. Now we less our expense. So which expense will affect the receivables? Tulisema there is two items which will reduce the receivables account. We say that we have two items that will reduce the receivables account. But according to this question, if you read this question correctly, wanasema on that 1st December 2008, the schedule of the remaining account receivables was 14 for 20. That is on 208. Now remember, this bad debt near 207. So remember this bad debt near 207. But this account receivables watupatia hapa 14 for 20 near 208. Hii near 208. Now meaning wametoa 959,000 ama wajatoa? So that is my question. Is it removed or not? So remember, the receivables balance near 208, but the bad debt near 207. So the question is, the 959,000 imetolewa ndani ama haijatolewa?
Imetolewa.
Yes, imetolewa kwa sababu ni 207 na sisi tuko 208. Now, my question now is this. What about this one? Provision for bad debt. Remember, provision for bad debt ilikuwa for 2008. At the end of 2008. So remember, this is at the end. So this one, this balance is at the end. So remember, this one is at the end. 31st, 12. Mwaka ukisha. Now, my question is, because everything inakuanga at the end. So kama ile ya kwanza bad debt ni ya 207 mwisho. So mwisho as tukifunga mwaka. So tukifunga mwaka kumaanisha tukiingia 208 wakati walitengeneza receivables account walitoa the ending balances ya bad debt. So wakapata 14 for 20. Now another question. The provision for bad debt watuambia ni ya 208. 208 wakati gani? The balance carried down ni ya 208 mwaka ikiisha. So my question is, the provision for bad debt imetolewa ama haijatolewa kwa receivables? Yes, provision for bad debt ya 208 ikiisha mwisho, 208 ikiisha. Ilitolewa ama haijatolewa? Remember 14 for 20 ni mwaka ikianza. So 14 for 20 ni balance of the receivables mwaka ikianza. But remember the provision for bad debt ni mwaka ikiisha. So imetolewa ama bado?
Bado.
Bado. So what do we do? We remove the amount. So the amount is 14. So what will be the new receivables account balance? What will be the new receivables balance? $14,010, sivyo? The answer is in thousand. That one. So that's how you're supposed to prepare that account. That was how you are supposed to prepare that account. Tuko sawa mpaka hapo? So we do the last question. So I will do question number 28. I will do question number 28. I will do question number 20, or I do 29. Which one do you think I should do? 28 or 29? Then your assignment ikuwe mbili. So we have 4 questions. So nifanye mbili na nyinyi mfanye mbili. Let me do question number 29. Let me do 29. And then nyinyi mtafanya 27 and 28. So let me do 29. 29. So someone to read for us. I have nimebakisha 30 minutes. I have another class from 5:30. So someone to read for us haraka haraka tafadhali. Ya Pauline Orua. Someone to read for us that question for Pauline Orua. Haraka haraka ndio tumalize hii. So this one will be the end of the bad debt actually. So tukishafanya hiyo.
Pauline Orua commenced business on January 2006 and prepares her financial statements to 31st December every year. For the year ended 31st December 2005, bad debts written off amounted to 1,400,000. It was also found necessary to create an allowance for doubtful debts of 2,600,000. In 2007, debts amounting to 2,200,000 proved bad and were written off.
J. Sweeney, whose debt? J. Sweeney, whose debt? Endelea. J. Sweeney, whose debt of Kenya shillings 210,000 was written off as bad debt in 2006. Settled her account in full in 30th November 2007. So there was a recovery. As at 31st December 2007, the total number of outstanding were Kenya shillings 92 million. It was decided to bring the provincial up to 4% of this figure on that date. In 2008, 3.8 million of bad debt were written off during the year, and another recovery of the 20 was made in respect to the bad debt written off in 2006. As at that 1st December 2008, the total debt outstanding was 72 million. The allowance for doubtful debt was charged to 5% of this figure. You are required to show for the year 2006, 2007, 2008, number 1, the bad debts account. Number 2, the bad debts recovered account. Number 3, allowance for doubtful debt. Number 4, extract of the income statement. And number 5, depreciation and disposal. You know, yes, that is not supposed to be there. We are not talking about the depreciation. So this one was a type in error. So depreciation wametoa wapi? We don't have something like depreciation hapo. Here depreciation is you wametoa wapi? So we don't have something like depreciation. That question was tested in CASNEB past paper in 2006. So that question was tested in CASNEB past paper in 2006. Long time ago. Very long time ago. So we have a few minutes to that question haraka so that we finish this one, so that when we meet again, God willing, we shall start from bank reconciliation. We shall start from bank reconciliation. We shall start from the bank reconciliation. So the question is question number 29. The question is question number 29. So bad debts account. So we start with the bad debts. So wamesema tufanye 206, 206, 207, 208. We need to do for 206. Then 2007, then 2008. Hapo iko sawa. That one is fine. So what's the bad debt? What is the bad debt? Inaenda kwa P&L, so unaangalia the one which so Orwa commence business on 1st January 2006 and prepare the financial statement at the end of the year. For the year ended at 1st December 2005, the bad debt written off amounted to 14 million, 1.4. So let's put this one in million, in thousand. So bad debt to P&L. Bad debt to P&L, 1,400. So then this one will be the debtors. So we need to raise the receivables account. So receivables account, we shall raise it by the same amount, 400. That is correct. So that's 206. We continue. In 2007, the bad debt of 22,100 proved a bad debt. So we have another bad debt in 2007 of 2200. So bad debt to P&L. Bad debt to P&L 2200. should make in thousand, 2,200. So this amount shall reduce the debtors by the same amount. So debtors by the same amount, because we don't have the we have the name of that person. Atuna. So to me, to the data, the word debtors. Then in 208, 3.8 debtors were written off. So in 208, the debtors was 3.8. So bad debts. So bad debts to P&L, that 800. So how do we write off? So how do we write this one off? So it is the debtors, we reduce the debtors by the same amount, that 800. Tuko sawa hadi hapo? That's number one, tumemaliza hivyo. Number two, they said we prepare. Now, bad debts recovered. So I'm not going to prepare the bad debts recovered at the moment first. Let us go to our normal one. Provincial for doubtful debt first. Provincial for doubtful debt. Provision for doubtful debt. Provision for doubtful debt, I think that one is okay. In that case, now we need to calculate the first provincial. So corner 206. I hope it will share. So I don't know the size, but I think it is a share. So to corner 206. 2007 or 2008. I think it will share. So 2006, 2007, then ya mwisho 2008. I think it will share. Sawa sawa. So let's see the provincial. Now we need to start with the provincial of the first year. Now, provincial of the first year 206. Let's do a working here. Let's do a working for the provincial first. So that we know if we have an increase or a decrease. So 206, 2007, 2008. So in the first year wanatuambia, if you go to the first year, it was found. So 206 after 1.4 anasema it was necessary to create an allowance for doubtful debt of 26 million. So to save 2,600, let me put it 2,600. We put the amount in 1,000. Nimefanya hapa. So we are hapa tutatumia in 1,000. Aya, 207. Now in 207 wanatuambia pale chini. It was decided to bring the provincial to 4%. Now 4%. 4% of what? 4% of the total receivables. So what was the total receivables? Now the total receivables, so in 207, debtors amount of 2,200 proved to be written off, and whose debt of 2,100 was written off in 206. On 30th November 207, so as at that 1st December, mwaka ikiisha ilikuwa 92, so wametoa kila kitu. So hiyo wameshatoa kila kitu. 1 2 3, tumesema iko in 1,000, so tunatoa 0.3. So how much is that? Itakuwa ni 0.04 times 92,000. 3680. Do you have an increase or a decrease? Aya, tutaangalia baadaye. Let's go to the last one. In 208, that 800 bad debt were written off during the year, and another recovery of the 200 was made in respect to the bad debt in 206. After that 1st December 208, mwaka ikiisha 208, ilikuwa the total debt receivables ilikuwa ni 72 million, but they changed the percentage to 5%. Now this one is mwaka ikiisha. So mwaka ikiisha kumaanisha ametoa kila kitu. So mwaka ikiisha at the end of the year of that year, mwaka 208 ikiisha ilikuwa 72,000. So kumaanisha already wameshatoa the bad debts. Kwa hiyo hapa wameshatoa bad debts na wameshatoa the provincial. So you don't need to consider that items. So itakuwa ni 5% times 72,000, which is 3,600. So tuanze na ya kwanza. So ya kwanza haina shida ya this one. Do you have from 26 to 3680? Do you have a decrease or an increase? Do you have a decrease or an increase?
An increase.
Yes. Anasema an increase ya ngapi? What is the increase? Increase.
Of
What's an increase?
1080.
1080. So you say 1080 increase. What about the second one? Do we have a decrease or an increase or a decrease?
Decrease.
Ngapi?
80.
80. So unakuja hapa. Tunaanza na P&L. So we shall start with our P&L. To the P&L, so we call it the P&L, which is our provincial for bad debts. How about we call it provincial? It's confused. Provincial for bad debts to P&L. So the first one, tunachukua the initial figure. Because the initial figure is 2600. 2600. Then the balance carry down so that we balance that figure. Itakuwa ngapi? 2600. Tunaibalance hivyo. So hapa itakuwa ni the balance. Row 7. Row down. Ya ngapi? 2600. So we have the provincial for bad debts. The increase for bad debts to P&L. So the increase ni ngapi? Ndio hapo 1080. Total figure kama tapunguza chini kidogo ndio itoshe. So we add them together. So 2600 plus 1080, which is 3680. The other side is 3680. So balance carry down 3680. So tunaingia 208 2008 2008. So we have our balance go down, which is 3680. Now we have a decrease. So our decrease is called an income. So we say provincial for bad debts to P&L. Ilikuwa ni 80. Then you can have our balance carry down so that we can complete our equation, which is 3680. That is 680, which is that 600. Tuko sawa? Tuko sawa kabisa? Amjibu?
Tuko fiti.
The next item is we are supposed to calculate the bad debt recovered. Bad debt recovered account. Bad debt recovered account. We do it here. Bad debt recovered account. So the bad debt was recovered in 2017. Not 2017. 2017. We have a bad debt recovered in the year 2007. The year 2007. So in 2007, bad debt amount to 200 were approved bad debt, whose debt of 2100 was written off in 2006. Settled the account in November 2007. So 2010,000 was recovered. 2010 the 2010 it was not 2010, it was 7. So it was 7. It was 7. There was a bad debt recovered. So alikuwa anajiita 27, alikuwa anajiita huu J Sweeney. So J Sweeney paid. So when we talk about the bad debt recovered, the amount that was recovered shall be credited in our bad debt recovered. So our amount shall be so we shall debit this amount that was recovered. So took in 1,000. It was 210. Allow me to use another pen. So we have a recovery. Recovery, you shall credit it. So the recovery, you credit it in the bad debts. So J Sweeney to 210. So 210. Did you have any other recovery? Did you have any other recovery? Yes, in 208. In 208, we also have another recovery. 2008. 208 and SEMA. In 208, 380 bad debts were written off and a recovery of 320 in respect to the bad debt written drop in 206. So, but it was recovered in that year. So how do we name it? Haina jina, so we can call it various receivables. Haina jina, we call it various receivables because hatujui jina of the 20. So that amount was recovered in 208. So that amount was recovered in 208. I think that one is all. That one is all. That one is all. And then that recovery would be other incomes. So we shall have P&L of how much? So you're placing ngapi? 530. So this one is a gain or a recovery, it's an income. So to P&L. So this recovery is to P&L. I always call it profit or loss. Profit or loss account so that we can balance it. So this amount inaenda kwa P&L as other incomes. So itaenda kwa P&L as other incomes. Itaenda kwa P&L as other income. So itaenda kwa P&L as other incomes. So this one will be other incomes. I don't know if sema hapo. Other incomes please kuchanganye because tumetarajia that hii amount hatutalipwa but the customer akalipa baadaye. So wakati alilipa, we shall treat them as other incomes. We shall treat them as other income because we did not expect them to be paid. We did not expect them to be paid. So we shall treat them as other incomes. And then, what else did they require us to compute actually? Sikani memaliza. Uko na kitu kingine kweli? They require us to compute. So bad debt, we were supposed to extract income statement. You are supposed to extract an income statement. So extract of the income statement. So we say, so the extract of the income statement. So we need to consider the dates. We need to consider the dates. Actually hapa, nimefanya makosa. This one, because the dates ni tofauti, 207 and 208, we need to change. Let us change this one, because the dates. We need to show the dates of each item together because it has the different dates. They have different dates. This one has the different dates. So itakuwa 207. So P&L 2007, between 210. Then P&L 2008, 320. So remember these are the gains. Okay, I think that one is fine. Now we can go to our last item. So we less expenses. So 2006, then 2007, then 2008. So it wasn't at the first one. Bad debts. So our statement is in 1,000. Our statement is in 1,000. Our statement is in 1,000. So 206, we have a bad debt of 1,400. Then you have a provincial of bad debt of 2,600. 207, you have a bad debt. 207, you have a bad debt of 2,200. And then you have a provincial of bad debt. Provincial of bad debt, where is it? Here, 1080. Here is it, 1080. You see it there. Then 208, we have a bad debt. Then I here, so 208, we have a bad debt of 3,800. Then this one, we call them the other incomes now. So we add other incomes. So 2007. So 2008. We have an income here to the P&L of 80 shillings. Hope you can see it here, 80. So provincial for bad debt. So remember this one we're supposed to less them. These are expense. So correct the others, the other side. Then income you're supposed to add them. So you have other incomes here. You have another incomes here, 2007. P&L, recoverable, 210. Then you also have another one, 208. P&L, recoverable of 320. So that is an extract of the income statement. So that's an extract of the income statement. So I think that one marks the end of our bad debt. So that one marks the end of our trade receivables, bad debt, and provision. So we shall do more of these items when we shall be doing adjustment. So remember, we have not yet done adjustment. This is another topic on itself. Adjustments. So we have not yet done the adjustments. So this will be, I think, topic 5, if I'm not wrong. Supposed to be the next topic after this, topic 4. So this is topic 4, which we are doing. So remember, topic 4 iko na depreciation. Tukitoka depreciation, tunaingia the bad debts. And hizo, tukitoka bad debts, tunaingia the cash. For cash, we shall be talking about the bank reconciliation. So the bank reconciliation. Then about from the bank reconciliation, what else? Now, tukishamaliza, then we can go to adjustments. Now, but before we go to the adjustments, we need to finish these items. Now, when we meet in our next class, this is what we are going to do. So that marks the end of receivables and bad debts. That one marks the end of receivables and bad debts until tufike hapa, until tufike adjustments. So when we meet the next class, we shall meet and do bank reconciliation. Statements. So up to that point, do you have any question whatsoever? Linda, do you have a question?
No.
Okay, so you represent the others. So we meet the day after tomorrow. We do bank reconciliation statements. So we meet the day after tomorrow.